Welcome back to Trading with Artists and Will, everyone. Today, I want to share with you guys on how to create the framework to a winning mindset. This is a more polished version of my presentation that I gave in Miami, and I wanted to share this journey with you because this is what I have personally used to change my mindset around trading and how that became essentially the turning point for me becoming consistently profitable. And a lot of the inspiration for these concepts that we're going to talk about today come from James Clear from Atomic Habits, Ego is the Enemy from Ryan Holiday, and finally Trading in the Zone by Mark Douglas. James Clear in Atomic Habits states that you do not rise to the level of your goals, but you fall to the level of your systems. And today we're going to be really focusing heavily on how to build a sustainable process for your trading. So first, we're going to start with how winning starts from within, which involves talking about who you are, and then we're going to go down and discuss how you think, and then finally how you operate, then recap everything, and then finally some actions to take after this video. And don't forget to subscribe to the channel as more videos like this and more trading content is coming soon. And so when you think of a winning mindset, it all starts within, because the first thing you have to realize is that trading is personal. It's not just technical, it's psychological, emotional, and very, very personal. Every chart, every setup, every decision, it's all filtered through your mindset. And if you don't build the foundation, no strategy will save you. And to do this, you have to think like a winner. Most traders obviously want to win, but very few understand how to think like a winner. They want the strategy, they want the entry, they want the shortcut, but real consistency starts somewhere else. It starts inside. And this one decision has changed everything for me. Most traders, and in every other aspect of life, wait to feel like a winner before they actually act like one. But it's the other way around. You act like a winner first, and the results catch up later. I always tell the traders I've coached and mentored that profits are a byproduct of good trading habits and following your process. And this starts with your identity first. You have to ask yourself, what would the disciplined version of me do? Would they FOMO into this trade, over leverage, or even skip journaling? Probably not. And that's the whole point of what I'm trying to talk about. That one question is what you need to ask yourself daily to keep yourself aligned with who you're trying to become. You don't rise to your goals, you fall to your systems, and your systems start with your identity. And ultimately, your identity is who you are. You have to first realize that anything in this world is possible. For me, I was never supposed to be a trader. I come from a family of doctors, and that was the script pre-written for me essentially. And even a high school teacher told my then friends that he's not built for anything outside of medicine. But I had this quiet belief, and I like to call it unrealistic optimism, which is the belief that I could build my own life however I'd like, and I'd actually have the discipline to actually follow through on it. And I followed real life examples of people who actually did it their own way too. The first is Google. In 1998, the idea of indexing the entire internet seemed absolutely crazy, especially against crazy players like Yahoo and Alta Vista. But two grad students, Larry Page and Sergey Brin, out-algorithmed billion-dollar giants in a rented-out garage with borrowed computers. And in the case of Meta, in 2004, MySpace dominated the social media space, and the idea of real-name social networking seemed like a privacy disaster. Facebook, at the time now Meta, out-executed the rivals by focusing on the college network effect, being a first adopter of mobile first, and then scaling globally to what we have now as Meta. In the late 90s of China, no one believed people could actually buy goods online. The country had weak internet infrastructure and no real online payment trust. But Jack Ma told 17 of his friends in his apartment complex, that they would build the world's biggest e-commerce company. And with just $60,000 pulled together, the company is basically known as the Amazon of Asia now. And lastly is Steph Curry, which is probably my biggest inspiration out of all of these four, because this NBA star was criticized as being undersized, not athletic enough, and didn't fit the mold of a traditional basketball player. But he worked ruthlessly on mechanics, movement, and mental fortitude. Hate him or not, he has now revolutionized how basketball is now played. Every single team now prioritizes the three-point ball. And the key component of Steph Curry's success is that he trained like an MVP before the league saw him that way. And James Clear puts it very well when he states that success is the product of daily habits, not once-in-a-life transformations. And so you have to understand where you point your energy and the direction. Most people who try to become profitable traders have the inspiration, but often don't know where to point it. The daily habits revolved on your life and trading define the type of trader that you are. And once you align the path of your life towards success through constant repeats of daily habits of a consistently profitable trader, then that is when you can go very far. And once you've discovered the identity that you want to actualize, you have to think about how you think. And you have to realize that emotions are the real enemy. Once you've anchored your identity as a consistent trader, the next layer is your internal world. How you think, how you process risk, and how you deal with uncertainty. And this is probably where most traders collapse. Not because their strategy is wrong, but because their emotional regulation is weak. Fear, greed, FOMO, and revenge are the emotional cocktail that destroys otherwise good systems because they cloud judgment, they accelerate entries, they shrink exits, and one moment of impulsive action can erase weeks of discipline. And I'm sure you've all been there, but for me, that was a $96,000 lesson. When I first started, I turned $7,000 into $96,000 using weekly options. But there was no real system, just high conviction and literally a complete lack of awareness. And for a while, I felt like I had solved the game. I'd figured out the stock market. But in reality, I hadn't. I was just getting lucky. And that run-up literally taught me nothing. The downfall rather taught me everything. I gave it all back in 2 months, and it wasn't because my edge failed, it was because my mind did. I didn't have the mental structure to handle the volatility I was playing with, nor even the size that I had put on. And that's what ultimately broke me. And this mental crack is also why people blow their prop firm accounts when they're on the last day before payouts. Ryan Holiday puts it really well when he says that ego is not confidence, it's an illusion. It can be loud or silent, but it completely disconnects you from reality. And ego is something that is heavily untalked about in the trading space, but you have to understand it. And that's because ego is probably the most deceptive threat in trading because it wears different masks. It's not just arrogance after a winning streak, it's also the fear of being wrong. It's exiting early because you don't want to be hurt again, but it can also be when you hold past your stop loss because you think that maybe it'll bounce. And worst of all, it feels rational in the moment. You get those blips of, I had no idea what happened, and it just felt like another conscience took over. So it's important to realize that ego isn't just confidence, and the more subtle it is, the more dangerous it becomes. And so once you recognize ego, you have to understand how to regulate, overreact. And every trader is emotional, no matter how hard you try. We're human. And the difference is how well you can regulate it. Most traders react to their emotions rather than reacting to what the market is giving them. And they enter off hope or exit off of fear. And they don't know their own patterns. They don't have systems to absorb emotions before execution. But trading is a performance skill. And like any performance skill, your state matters more than your script. You could have the perfect entry criteria, but if your head isn't clear, you'll sabotage it anyway. And this is why you need to start building structure. Structure is the way you regulate emotions, and it's not through willpower, it's through a well-organized system. This is what saves you when discipline fades. It's what protects you from yourself on your worst days when everything seems to go wrong. And so you have to make it as systematic as possible. This implies you have to have a routine, knowing exactly what qualifies as a setup, and logging every trade the same way. A great way to help with this is to review. Reviewing your performance has to be on schedule and not just when it feels good. There also needs to be a standard of quality in terms of in-depth analysis rather than just simply putting, I traded a flag, it was great. And this ultimately will help you provide a lot of clarity to your trading. Structure removes the guesswork and replaces emotions with clarity. It gives you a set of rules to fall back on when your psychology inevitably starts to drift. You need to treat trading like an athlete treats game film. You need to build a checklist not just for setups, but for behavior too. And every week you should review your P&L to gauge how you move through the market mentally. This ultimately is your edge. It's not the chart, but rather it's your progress. In trading, you shouldn't feel like you have a wide spectrum of emotions that fuels your decision making when you actually do your trades. Your process should provide clarity and calm. But the biggest hurdle, and this is probably the zone where most traders never reach because they don't stay in the game long enough to stabilize their own minds. If you can regulate your thoughts, control your state, and execute through clarity, then your system finally gets a chance to do what it's designed to do, which is work. And so once you've built the identity and you now are thinking clearly, the final piece is how you operate. The first thing you need to understand is the time horizon. You have to be able to think in weeks, months, and years, not days. Most traders think in dopamine hits or daily goals, and these are outcome-based methods of thinking that forces bad decisions. One bad day of trading or a red P&L does not dictate the end result of the year if you don't allow it to. And so the way to broaden your time horizon is to understand capital preservation. The truth about trading is simple. If you lose your capital, you lose your option to play. You're out of it. The focus should always be your risk on a trade instead of the potential profit generation. You want to mitigate as much FOMO as possible so you don't enter a trade that gives back a lot of gains from another trade that did really well. And to do this is to focus on goal setting. I've always discouraged traders that I've coached and mentored from setting number values as goals because you will become fixated on hitting that target. And so this leads to either forced trades since you are so close to that target, or you overextend yourself because you had hit that goal, but you gave back some and you want to go back to where you were. And ultimately, this leads to that downward spiral where one bad trade leads to another because you are chasing an outcome and not following a process. For following a process, you need to first start with a checklist. I've set a criteria that each trade has to meet, which includes the setup, my sizing, and my review process. For the setups, I only take A+ setups. No, I think this could work setups, or it's a gamble or 50-50. I've identified which setups I prefer, which ones I've performed better for me, and the ones that just simply don't work. And the keynote is the for me part, because it's not based on historical performance, but rather what's worked for me. History doesn't repeat, but it often does rhyme. As for sizing, it has to be based on a system and not on emotions. A single trade shouldn't be able to wipe out a week's worth of gains or completely cripple your account. Your sizing should also match the quality of the trade and conditions of the market. You shouldn't be going full size when the rest of the market is choppy, but your setup might look good. And being able to identify the ideal market conditions to where you can actually put on full size is the key to unlocking consistency. And finally, trade reviews has to be every single day with weekly trends and monthly reflections. I input my thought process and reasoning for the trade before entering. I also journal down my thinking while sitting in the trade. And finally, I log my post-trade takeaways. That way, when you reflect and go back on your trades, you understand what you thought before, during, and after that trade. And from there, all you have to do is iterate. Every trade is one iteration in a way larger system. As a trader, you're basically a data collector, and every trade is a data point. You're not trading to make this trade work. You're trading to make your process more refined every single time. And so eventually your system becomes your edge and your process becomes your trading identity. You don't need external validation anymore, and you definitely don't need to force wins. Consistency isn't found in intensity, but rather in repetition, feedback, and constant iterations. And so just to recap, we talked about how winning starts within, and it first starts with who you are, then goes to how you think, and finally that evolves into how you operate. In terms of actions to do from here, you have to first identify and define the type of trader you're committed to becoming. Write down the core traits of that version of you, the discipline, the patience, and the precision of your trades, and use them as your filter for every decision you make. From there, you can analyze. Audit your last 10 trades and review them. And it's not just by the outcome of the trades, but also the behavior of when you took those trades. What patterns keep showing up? Hesitation, impulse, or even oversizing? And ultimately, what do they say about your current mindset? And from there, you can think about execution. Create just simply one rule to start with that protects you from your most common mistake that you found from your trades. From there, you can set a structure like a checklist, a journal, or even a daily routine that holds you accountable to it every single time. And so by doing these three things, it creates the framework to become the type of trader that you want to ultimately become. And so if you enjoyed this video, make sure to like and subscribe and comment on any other concepts that you'd like to hear about. Other than that, I hope you enjoyed the video and I will catch you guys on the next one.